Welcome back, everyone. Today we're going to look at SoundHound. Currently have a covered call on SoundHound, and I'm looking today to close out that option and lock in some premium. So let's dive right in. As you can see here, I'm looking at SoundHound on the 4-hour chart, and what I'm looking at is there's a lot of support at this level. And you can see a lot of volume, buy volume at the level of about $9, and also some additional support about the $9.50. So I'm assuming that based on this chart, you can see we got some consolidation happening here. We're at a low point, 9.65. You can see if I put this here, we're right about this level right now. So I'm assuming there's going to be a bounce off of this support. So in terms of covered call, I'm looking at as it decreases the value of the stock price, the premium of that covered call decreases as well. So what I want to do is lock in some premium. What I'm going to show you is, based on this chart at this low point, after closing this covered call, if SoundHound decides that it wants to come back to the level of, let's say, 10.5 or 10, then what I would do is open another covered call. So let me show you what I'm looking at here. You can see I currently have a Sound 12.5 strike with the 620 expiration, and you can see there's $200 of premium that I can close out about 60% of the premium. So what I'm going to do is I'm going to go ahead and close that out. And what we're looking at here is currently the value of the option contract is $13 per contract. You can see I have a total of 10 contracts. So if I were to put 10 there, then you can see my estimated cost to close that would be $130. One more thing I'll show you here is there's the $130 there. That's the contract value. So simulate my returns. You can see if I close it out now, I'll lock in the $200 premium. If I wait until expiration, you can see there's an additional $130 there. So that's how the 60% plays into that. But, I've had the contract for about 2 weeks, so I'm going to go ahead and close that. I'm going to go over here to a tracker that I use. And you can see I opened this covered call on 5/22, covered call, the strike price of 12.5. The stock price at that time was 9.85, and expiration of June 20th for a total of 29 days of the option from the time of open. And you can see it's been open for 15 days and actually open for 14 days, 15 days left to expiration. So it's about 50% of the way there. And if I were to close it now, you can see I could lock in, if I buy it back for $130, I could lock in $200 in premium, which ends up being about $14 per day average return on that. And so that's greater than the $11. So I think I'm going to look at closing this option contract. If you have any questions or comments, I'm going to be going over more of my tracker that I use to log how much premium I collect, how much I'm estimated to collect in premium. So you can see in the month of June, estimated to collect about $1,000 of premium on 28. Actually, let me move that up here. So you can see here that I'm estimated to collect about $1,000 of premium, let's say in June, with about $28,000 of both cash collateral, stock collateral. That's an average of about 3.7%. So I target 2%, and depending on what the indicators show, I'll push that to higher percentages. Depending if I close it out early, right, 130 here, you can see it drops a little bit, premium drops a little bit. So I kind of gauge that based on, let's say, an 80%, of total, or 50 to 80%. But I manage that. This is how I manage my trade. So I'll go more into that in detail another time. But as you can see here, just dropped a little bit more. 9.59 is the stock price. You can see Sound is down about 6% today. So with big pullbacks, not always, but sometimes you see a bounce back the next day. It's not always the case, but for me, I'm happy with, like I said, locking. If I go back here, I'm happy now. It's $210 in premium. So, you know, if I look at this on the 3-minute chart, you can see it's right at this level of a bottom, maybe for today. Could go lower, but I'm going to assume we're kind of at that bottom. Like I said, I'm happy with collecting that premium. So if I put 2 contracts there, you can see it was 130. Now it's 120. I'm going to go ahead and review that order. Bid and ask is one cent. So we're not going to find a middle point there. That's the 12 cents is good. I'm gonna go ahead and submit that. Partially fill. We'll let that fill. Okay. Now all of those 10 contracts are filled, and you can see I paid a limit price of 12 cents per contract. So if I come back here, you know, let's say $12 per contract times 10 contracts, you can see that's $120. The stock price at close, 9.59. So I keep track of this here. So tomorrow, if the strike price or the stock price is above 9.59, let's say it goes back up to 10, I'll just initiate another covered call out with the strike price that's you know, at the 12.50 range. And depending on what the indicators in the charts show, I'll look at that again and decide to enter another one. So, you know, $210 in 14 days, 10 contracts, $12,500 collateral. Date close is today. And so we can see based on that, it's about $15 per day, which is not bad. So yeah, so then what I'll do here is just close that out, and then I'll come back to my Robinhood account, and you can see that that option contract is no longer there. It's now locked in $200 of premium. So we'll see what happens tomorrow. Yeah, thanks for watching. Make sure you subscribe, hit the like button. Also, you know, down link below, we have a link to our Discord community where you can sign up, be a part of what we're doing there. You'll see these trades live. There'll be other trades and things that we're going to be doing with our community. Also, education and how to sell options, how to initiate covered calls, cash secured puts, delta, theta, just everything that goes with selling options. We'll also cover some cryptocurrencies that you can see in some of our videos as well. So a lot of educational opportunity, also some real trades and real opportunity to maybe practice with some paper money. If you're not used to selling options or first time beginner, we're going to be going over step by step how to do that with paper money, so you can see exactly the steps needed to take. You can follow along with us and see how it works. And then when you're ready, however long that takes, you can transition into real money. So hope you enjoyed the video. We'll see you next time. Thanks.